Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Wednesday, December the 11th, 2024. I'm going to start with the S&P 500, but I'm actually going to start by saying that those of you that trade the NASDAQ, I sure hope you enjoyed the absolute moon shoot today. That just it went jumping for the moon or just jumped right into the stratosphere in the NASDAQ and just really, and it was all due to just a few stocks, and we'll get into that. But those stocks also, some of them had an effect here on the S&P. Now, we did get back above 6,100 today in the futures market, and that was kind of important, but it couldn't hold. So what I'm feeling is that we are within the minuet wave 5 now. So again, according to how I'm counting this, we're in minuet wave 5 of minute wave 5 of intermediate wave of minor wave 5 of intermediate wave 3. Now, where we are inside this minuet wave 5, I'm going to have to say that we're likely within only the first wave. And that first wave may either be complete or is still got another little run, and then we drop again. And so, in other words, we're going to just have this a standing 5 wave advance, and it's going to come in a 1, 2, 3, 4, and 5. 2 and 4 are corrective. 1, 3, and 5 are going to be impulsive to the upside. So wave 1 can always start off pretty strong, as we saw it do today. The markets did a real loved the CPI uptick, 1/10%. Yeah, it's okay. We love it. But it wasn't so much that they were making a statement about the CPI. I think it was more that we're making a statement about year-end capital flows and options flows. And ladies and gentlemen, I want to just let you know that the options flows are astronomical. And if you're an options trader, there's so much going on, and the movement is dynamic intraday. Take Tesla, for example, take Meta. So Tesla and NVIDIA, heavy traded. The equities are trading a lot. And I'm talking about that, and I'm doing this, but this is a little bit of a trade talk, okay? But we're going to get back to what's going on in the market. But these intraday moves in the Mag 7 are incredible. And as a trader, they're super incredible. So we're talking about Tesla. And so I want to go over there, and I'm going to just put it up here and put it in look at it a little bit differently. But we're talking about a stock that had a range today, $15 range, actually even bigger, $22 range, high to low. And under 103 million shares of Tesla, the options in just today, these are the 157,000 of the 420s, which they went to. They made in the money. The volatility is high. These expire on the 13th. I'm thinking we might get this type of upside move, this power, this going back and forth. So, 20-point ranges maybe in the underlying, or less or more. And that may be what we get at least until next Friday, because next Friday, the 20th of December, is the monthly expiration, and it's the last big expiration. And I want to tell you, the way things are trading, it is going to be dynamic. So, in other words, just from a pure trading point, folks, that's what I'm talking about. Pure trading. Trade the numbers. No bullish, no bearish. These things are going to move as capital flows in and out and just gets shifted around right till the very end. And then we'll see what we got going on in starting in January. But right now, I think we are completing this larger intermediate wave 3. It's now timing, right? So is it going to be the 20th, or is it going to be the end of the year? So those are our choices, and it depends on which index and what stocks are involved. So this is going to be very calculated. Understand that you're trading with algorithms. Back to the charts. So I'm not looking at this as being like 1, 2, 3. This is a 4. We got just the 5, and we're done. I definitely don't think that because that could be done tomorrow. But I'm feeling that what we could be doing is finishing one, and this might be a two or it's a four, either two of, so sub minuet wave two of minuet wave five. That's what this downside could be. And this would be wave one. Or this is one, two, three. This is a four of that first wave. And then we go back up, new high, come back down again. So I'm talking about this is what the kind of volatility I think is we're going to have going at least till this Friday and likely till next Friday. So right now, I think what we got going on is this is corrective. Here are our markers for that correction. And they're just pure fib numbers, fib levels that go along with a two or a four. So I basically lined it up to be more of a four, thinking we got one more and that completes a five. That's going to be my best on my hourly. Then I'm telling you, got one, two, this is a three, little four, a five, and I'm going to stick a one on top of it. That's kind of the size that I'm looking at that we got coming off of this low. That does project that we're likely going to get to 61.91 or above. Because when we go out a degree, you're going to begin to see that what I'm looking at is the minute degree fifth wave. We got to get above that, which we have cleanly. And now we actually went above the third. So that's what's kind of important about this. It's like we know we're in that fifth because we broke the high of the third. So four is done, we're in five, it's just likely one of five. And these, we've got just so much Fibonacci above us that it just continues to suggest, and the way that the whole thing has been unfolding, and the volume and the thinness. That's the other thing. And I'm talking about thinness between bid and offer and how thick that may or may not be going up. Because sometimes they'll come in the buying because whatever's happening in the options is forcing that hedge in the underlying, which is then forces that hedge or the movement in the index, depending on what stock it is and what it's contributing to that index. Tesla, Apple, Google, Meta, Microsoft, Nvidia, Netflix to a degree. These have pull on the NASDAQ, greater pull. And in other words, and what I really mean by that is like you had Apple and you had Tesla moving in the same direction early. Apple going above 250, Apple trading solidly above 250, but still failed at the end. So, that was the call wall. And the call wall, they let it play around a little bit, and then they went no, and bam, they took it down and it didn't challenge it again. It may, and I would expect it to be honest with you. So you got that Apple and Tesla were in play, both to the upside. And Tesla just boom. You got back above 400, dropped below, got back above 400, got back above 410, started pushing higher and accepting it. So it was a little bit interesting, and that kept the NASDAQ well bid. We still had pullbacks, but they really were pullbacks that if you were a day trader and you just wanted to scalp it, that was great, but you would still continue to look for it to continue higher until it reached some higher level resistance. And that would be fib, intraday fib resistance. And so going back to this chart, I know, long way around me telling you about what I think could happen tomorrow. So I think that if we're going to continue, we're going to come down in a 2 and or 4. It's going to look like an ABC. And I'm just going to open this up so that you can see this. This is what I'm talking about. If this is going to be a 3, then this is an ABC 4, and that actually could be A, B, and we're coming down and finishing. On that basis, you're going to be looking for 6,080. 81 down a little bit below, but not too far because we got the 50% at 6074. We got the 50 at 6,071. These are all off the hourly chart. So they should be able to provide some good, solid support for either that 1 or that 4. If it's a 4, not looking for too much more than this, maybe that. But I'd be looking for it to go this way first, then come back, and these levels would surrender to a little bit larger of a correction, all in the process. Okay, so 4, we're inside the 5. We're counting 5, and we're determining, well, maybe, but I'd have to go down to a 15-minute, and I'm not going to do it right now. But right now, it just looks like it's a 3. Look for a small 4, go back up, get above here. We don't necessarily have more resistance. If it stops in here and goes, I can connect from here to over. You see what I'm doing? So if we get that 4 and now you're looking for where's it going to come up into here, well, then you're taking extensions, excuse me, I had to think of the word, extensions here to here, and then you cut over and you go to the bottom wherever 4 comes in. And then you're going to get, and you'll fill in these blanks because ultimately this is now the goal. And we'll see at that point whether this holds or whether we go further, because we're in that fifth. And if this is just going to be 1, 2, 3, 4, and then a fifth of 1, then you mark it as so. This does not come into play anymore. So in other words, it's like if we finish the 1, then we're going to come back in a 2. So we have to be careful about what we're going to consider resistance and what we're going to consider support. Right now, undone, if I'm considering this the 3, this would be for the minuet 5. So it stays in play even while we're doing all this internal, because it could be 1, 2, 3, 4, and then we get a 5, and that's going to be wave 1. This stays in place, but we likely might take this one out in the next target as we build up. But ultimately, we really would, if it's the 5, I'm going to be looking for it to get up into here eventually. All right. I think that if we go out and we take a look at the daily and look at those moving averages, they're still sitting very pretty. And what was interesting is how we had gotten below the 8, and look at that. Nope, we took it right back and gloriously closed solidly above it, correcting a little bit. No big deal. So everything in that manner stays in place. Let's go over and look at the NASDAQ. The NASDAQ was on steroids. And I'm just going to, here we are in the hourly chart. I'm just going to open it up. We got the 3 and the 4, same deal, right? It made it loud and clear, pretty much from the CPI number. I let it go through the CPI number. I thought, okay, maybe it's an ABC, and we got a little bit. We're going to come back down and finish that off in a wave 3 type of deal. But basically, because it didn't, and it just hung out up here, I put the 4 down there and I ran my fibs to see where we can get up to. And I did have 21,007 and 777, which I played around with. And I like the number, but then it kind of got up and went through it, came back down to it, played around for a little bit, and then just eventually went through and got itself up to 829. 820, excuse me, 21,820. So, and then ends up closing just below 755. In any case, looking at that, it was a moonshot, and it was pretty wild. It was pretty wild inside because of what I was talking about before. You had Tesla, solid buyers all day, whatever they were doing in those options. So this is what I'm talking about, the capital flows. The capital flows are coming in via the options. And it's the options flows that are generating the gamma, and the gamma is control of direction right now. And so it can really, when we start getting past these volatility triggers, and what we're really looking at is the fact that it might just really start to turn and grind in the direction. So today, that direction was up. So whatever they were doing in, as far as like I'm a dealer, right? As a dealer, you just got to stand there and buy the underlying or just buy the index, or you're going to wonder why, right? It's like, what's creating that? The fact that that same dealer is selling calls and the hedges to buy the underlying. And then if you go look at Tesla's options, they're talking about hundreds of thousands of options across several expirations. And we're going after 2026, 2025, 20, all that's getting filled in. And so the capital flow is tremendous in NVIDIA, in Google right now, in Meta, in Microsoft, a lot of these stocks, believe it or not, DoorDash, I mean, options that are just coming in. The stock is trading at 173 last time I looked at it. DoorDash. So everything's coming into play. And if you're really going to look at it that way, then you really got to go to the options. And the options are important because that's where money is flowing. But right now, I'm going to deal with the future. But options are a big topic. And so I give a lot of consideration because I am an ex-market maker. Okay, over here in the NASDAQ, we shot up and went past levels I talked about yesterday, particularly 21,600. We basically sailed up and through 21,600, and it made it pretty clear that we were eventually going to end up at 21,700. It's there that we started to slow down and play higher, lower, higher, lower. So 21,700 sort of became like the point of control. And eventually it got bounced up to 21,000, I would say 775. And then from there, it launched and got itself above 21,800, didn't hold, sold it off into the close. So again, here it provided some really nice trading. And again, I just wanted to bring it up because if you're an options trader, be looking at these stocks, thinking about positions. Direction is really wild. But if you can get in, you can get out. And if you're getting direction from the index or even from the stock, that it's like the buyers are outweighing the sellers. But the difference is it's like when we've got a group of buyers and they stop or they're filled or they're done and they step away, here comes a seller. Maybe he's got 50,000, maybe he's got 100,000 shares to sell. I don't know. Whatever they're hedging. And they come in and they do it. And the next thing you know, boom, 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 boom. And it turns into buying opportunities, to be honest with you, right now. So it's kind of risk on type of trading. But we got to pay attention to volatility triggers because if they get triggered and we're done, so in other words, it's done being worked for that day for year end, for that fund or whatever. But we know that in these stocks, they're heading towards Friday's expiration. That I'm pretty sure will be big and may be tradable, may not be tradable. If the options, yes, it will. As far as the index could appear very choppy because you're trading off of a shorter term chart. So again, what I'm going to be looking for here is we're determining that is this one, is that finish it? And now we're just in a wave two or are we in a wave four? Again, same as the other. This all kind of looks like, okay, a little bit of a rally. That was done. That was a 2, and then a 1, 2, and that's maybe a 3 and a 4 and a 5, 4, 5, and that would be a 1. But otherwise, I can probably eke it out to get one more run up. And I could have to attach small, but you can attach small fibs from this little bit to that little bit and see where we come in up here. Otherwise, we really would be looking for a run up to 21,885 to 21,000, I think 900. Yeah, up into that area. And don't forget that above and below, you're going to find a lot where people are going to try to trade around there. It kind of becomes a point of control. Continued upside resistance in terms of minuet wave 5. Remember, minuet wave 5 completes minor wave 5, minuet wave 5 completes minute wave 5, completes minor wave 5, and then tops out also in intermediate wave 3. So we're at that juncture where we got all the fives lined up and they're finishing up to a third. So that's the degree level. So intermediate's the highest, it's intermediate wave 3, and if I go one better, of primary wave 5. So we still have an intermediate fourth wave correction and then an intermediate fifth wave super rally to come. And timing, that's up to the market, not me, but it will happen. All right. So for tomorrow, our markers coming off are 21,728, which is just below where we are. And then we have 21,671. So you can go 670, maybe down a little bit, up a little bit. And then lastly, we have 618, which is at 21,626. So it's not really all that much. Definitely, I think we stay above 21,600. Finish it up in case it is a 1, 2, 3, 4, and this is a 5, and that's going to complete a wave 1. Then we're going to come down again in a 2. If this happens to be the 2, you're also going to find some support down here at 21,556. So I think that the market is healthy enough and took in that CPI number, by the way. Oh yeah, okay. A 0.1% has tossed a 0.1% improvement has tossed our indexes into a frenzy to the upside, and a 1/10 move in the opposite direction, which would be opposed to rates being cut, would send us into a nosedive. Today, they loved it, and it carried through. So if it's a wave two, then we should find some decent support at 21,557, 550. And then I'm still going to look for upside. Still same deal. We got Thursday, Friday. Tomorrow is PPI. Let's see how that comes out. You might get an opposite reaction, so just be on the lookout, because maybe it's just going to be a wave two, maybe it's going to be a wave four, and we'll see where we end up tomorrow morning when that number comes out. Ultimately, I continue to look for higher levels, and I do believe that the NASDAQ is likely headed above 22,000 at some point, and then we have 22,320, 22,475. We've got some fibs up there, but it's all going to be down to the structure. All right, that's going to be it. I really have talked enough. Next update will be on Thursday, December the 12th.